All right, guys, we're going to take a look at Google stock today. This is a massive company. It has fallen a tremendous amount from the all-time high. So I wanted to jump on, break down the fundamentals, and give you my thoughts if the Google stock is a buy at these levels. I'm also going to break down the chart, kind of give you my thoughts of where the Google stock price could be headed from here based on the technicals. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, we are going to take a look at the Google stock. I'm going to do a full analysis here. We're going to break down the fundamentals, and I'm going to give you my thoughts if it's at a good valuation metric right now, if the price has fallen enough from the all-time high that we should be looking to jump in, or if we should continue to let it fall to lower levels. And then I'm also going to go over the chart. We're going to break down the technicals and kind of get an idea of where the Google stock price could be headed from here. I'm going to try to give you my thoughts of where you should be looking to buy Google at, and also where you should be looking to take profit and place your stop loss on any potential trade setups. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. But let's go ahead and get started, guys. First thing we're going to look at, we're going to go over the fundamentals. This is the income statement, guys. These fundamentals are pretty insane. For a company that has a market cap of $1.5 trillion to grow this much year over year is massive, guys. First thing we look at is revenue growth. And their revenue has been growing exponentially year over year since clear back in 2012. If we just look at 5-year revenue growth, guys, back in 2017, 110 billion, all the way to 270 billion in their trailing 12 months. Massive revenue growth there. Same with gross profit. I mean, look at the profit margin, guys. 2017, 65 billion, 153 billion in their trailing 12 months. When it comes to net income, same thing, guys. They did 10.7 billion back in 2012, and they did 74 billion in their trailing 12 months, or are doing 74 billion. Guys, this Google stock it's a monster, right? It's one of the best FAANG stocks I think you can personally buy. It's also sitting at one of the better valuation metrics over, Facebook, Apple, Netflix, Amazon, app, all of the FAANG stocks, right? So I really like Google based off of what we can see so far. They just did a stock split. Let's jump over to the balance sheet. For those of you guys that do not know what a stock split is, it's just when they add more shares to their outstanding float. Guys, the market cap stays the same, right? A lot of people think it makes the stock cheaper. It doesn't, because what you're paying for the stock is based on the market cap. So the stock was up there to $2,500, $2,000. They just added a lot more shares, brought the stock price down to like 115. So it entices new investors to get into it because they think it's cheaper, when in reality, you're really just paying what the market cap is. When it comes to the balance sheet, guys, total current assets, 177 billion as of today. Total current liabilities, 61.9 billion. So guys, they've got way more than enough cash on hand to take care of all of those outstanding liabilities. Very healthy looking balance sheet there. When it comes to outstanding shares, guys, same thing. They're actually buying back shares. The float is going down. They are not issuing shares. That is a very good thing to see. I would obviously prefer them to wait to buy back shares when the stock price has fallen. But with that being said, guys, I think Google could buy back stock at pretty much any time except for the all-time high and still provide shareholder value. Let's jump over now, guys, to the cash flow statement before we jump into the discounted free cash flow sheet, which is my way of kind of giving you my Google stock price prediction, right, of what I think the value of Google stock is worth today. Now, let's take a look at the cash flow, cash from operations minus capital expenditures, guys, and look at that massive, massive cash flow growth. Back in, 2017, they did like, 23 billion, and in their trailing 12 months, they're sitting at like 68.9 billion. Massive free cash flow growth there, guys. So it looks awesome from the face view, right? I put together the sheet to where I just kind of track the key metrics that I look for. Like I said, guys, 1.5 trillion market cap, revenue in the trailing 12 months is 270 billion. Trailing 12 months net income, 74 billion. But look at that net income margin, guys, 27%. Free cash flow margin, 25.5%. Right there in line with net income margin. That is exactly what we want to see. Very, very strong. When it comes to their overall revenue growth, compounded annual growth rate for the last 5 years, 23.3%. Absolutely awesome. Net income over the course of the last 5 years, what their net income has grown for 5 years, 29%, guys. Free cash flow growth on average for the last 5 years. So a little bit different than compounded annual growth rate. What their average free cash flow has grown year over year for the last 5 years, 25.7%. Massive. That is exactly what we want to see. When it comes to valuation metrics, guys, their PE is currently sitting at 20.3. I think that that is completely reasonable, right? You could probably even give them a little bit of a premium over some of the other companies out there within FAANG. So I think the 20 is right there where you want to see it. You want to typically see them 15 to 20, sometimes even 25 if they're growing really fast, guys, and growing their revenue 23% over the last 5 years on a compounded annual growth rate. Is you can give them a 20 PE. The price to free cash flow is 21.7. That's a little rich, but again, same thing right there at 20. I would like to see it fall just a tad more, but I don't see anything really wrong with that. If you see Google continuing to grow at a similar rate over the next, 3 to 5 years, 21 on the price to free cash flow is just fine. That kind of is a decision you have to make yourself. When it comes to shares, guys, they've bought back 5% of their shares over the last 5 years, 5.29% to be precise. So they're buying back shares consistently, exactly what we want to see. Let's jump over to the discounted free cash flow sheet, guys. Take a look at this. So what I did is I just put their revenue growth for the next 5 years at 15%. I wanted to be aggressive, right? Because that's what analysts are pretty much expecting. That's the high end. Their free cash flow margin is currently 25.5%. I just did 20. So I went a little bit conservative on the free cash flow margin and 15% on the revenue growth. That gives us an intrinsic value of $122, about 6% upside from the current levels. If we put in the numbers that they're doing right now, which is the 25% on the free cash flow margin, and their revenue growth over the next 5 years is right there at around 14, 15%, you're getting $152 per share, guys. So let's be more conservative on the actual revenue growth for the next 5 years and do 10%. So for the next 10 years, they're going to grow revenue 10% a year. After that, 5% in perpetuity with a 25% free cash flow margin. Your intrinsic value is about $124 a share. Guys, that's absolutely awesome, right? Because their current price is $115 per share. So if you think Google will continue to grow at 10% for the next 5 years and maintain a free cash flow margin of 25%, Google is absolutely a buy at these levels, right? If we drop down to the PE analysis, kind of just taking, Google, Facebook, Amazon, Apple, and Microsoft and comparing them based off of a PE, Google is got almost the best PE. Facebook's is better, but nonetheless, guys, the average over all of them is 28.4%. And I didn't even put Netflix in there. Netflix PE would skew the average because it is quite a bit more than most of the others. But if you give them zero premium, right? If you give Google no premium over Facebook, Amazon, Apple, and Microsoft, the desired or target PE here is 28.4 if you look at the average, right? Which would give you an intrinsic value per share at $160.70, 40% upside. I would rather look at the free cash flow rather than the PE. So take that with what you will, guys. I think $130 a share is right there when it comes to like the intrinsic value today. Now, if we want to be super conservative and we use like a 20, on the free cash flow margin, and we do, let's just say like 8% revenue growth, then sure, you're going to come up with a lower price, $91, which is 20% downside from current levels. So if you want to wait a little bit, you can do that, but it really just kind of depends on how confident you are in Google. that they're going to perform well over the next 5 years. Now, with bear market that's staring us in the face and the bearish macro conditions of the market, you likely could see Google continue to fall. So I think patience is everything here. However, guys, I currently added it to my dollar cost average portfolio, and so I have no problem just buying it week in and week out, whether it's high or low. I love Google. I think they've got a really good opportunity, especially based at these prices. So let's jump over, guys, and wrap it up while we look at the chart. The chart looks pretty good, right? I mean, it's doing some pretty interesting things. So you guys can see, Google had a massive run up from the COVID bottom down there at like $51 to the all-time high, which was up there at around $152. Now, guys, they just had the split, right? So the stock was like, it hit the high of like 3,000 before the split. But now it's 150, 115. So we're just going to talk in post split prices, right? Now, guys, take a look here. So we just pulled back, from the top. It was down like 30 something % from the all-time high to a major level, right? Your initial all-time high from back here in February of 2021. It held up there, kind of consolidated a little bit while it was testing that level. But as soon as you broke it, straight to the all-time high, guys. It never even back tested that level as support because there was just too much strength. Now you're kind of sitting here consolidating at that inflection zone. Guys, look at what happened. You had the big impulse, you broke the level, and look at this textbook bullish hammer. So you broke the zone, guys. Buyer stepped in and pushed it right back up, and you ended up closing inside that inflection zone. That's massive, guys. And on that bullish hammer, you had bullish bullish divergence on your MACD and on your relative strength index at the completion of that bullish hammer, which ushered in the spring. And then you came back to back test the bottom of the zone with a tweezer bottom right there. And then it rallied again, made a higher high than the previous high based off of the candle close, not the wick high. It also made a higher low, like I said, back testing the bottom of the zone, and then pulled back again, tested the top of the zone, making a higher low than the previous two lows, and then rallied again. And now you just made the third higher high. So you guys, you've got classic accumulation happening at a critical inflection zone with a textbook bullish hammer, and you've got some sort of a rising wedge, right? Now, typically this could be like a massive bearish pattern, right? You've got your pull, you've got your consolidation, and it's just essentially absorbing all the remaining demand at these levels before supply overtakes it and it dumps again. Guys, there is a super thin order book from like 105 to $86. So you break that inflection zone, you back test it as resistance, you're headed back to $86 like that. So you got to be careful there, but guys, there's just so many things implying bullish, price action at these levels, guys. You've got classic accumulation going on in this area. A couple of things I want to point out here. You had some bearish divergence on your MACD from this high to this high, which then played out very weakly and made a much higher low than the previous low. Your RSI is making higher lows. It just broke out of the neutral zone and is headed to test the bullish control zone. So, or the bottom of it at least, guys. Now let's jump over and take a look at the weekly. If we jump over here, guys, this is like beautiful, right? So you had a textbook bullish hammer at the inflection zone. And then look what happened, guys. So then you kind of had like this abandoned baby here. Sellers tested it again. And then you had an impulse candle. And then you had a big bearish engulfing candle to go back and test the zone again. But then buyers stepped right back in and you had a bigger bullish engulfing candle that has not yet been invalidated, guys. You had these two candles here showing signs of seller exhaustion. Buyers are stepping in, pushing those that price back up. So you've got those bottoming tails that just can't quite invalidate that bullish engulfing candle. Guys, this bullish engulfing candle right here is in play. It is valid until you get a close below the open. So still in play. Absolutely impressive there, guys. And look at your MACD, guys. The first level of positive momentum since clear back here in September of 2021. So that's awesome. That's exactly what we want to see, guys. You've got a lot of coinciding variables here implying at least a short-term rally, right, guys? So a couple of things I want to point out. this could just be a, a correction, right? From the bottom to the top, because you had a massive, massive impulse and you didn't really get any substantial pullback from the bottom to the top. What you could be working on, I mean, maybe you've got something like this going on, guys, where you've got like an A, B, C, D from the COVID bottom to the top. And this would take you to a 200% retracement because you've got your 50% retracement from the bottom to the top. So you've got a 50% retracement on your A to B on your C retracement. That would be confluent with a 200% retracement because AB equals CD. That would take you up there $200, guys. So this absolutely could be what's happening. But with that being said, you could also just be seeing this type of stuff where you've got a massive impulse, right? You've got a big sell-off, lower high than the previous high, which was also pretty much the same as this initial all-time high from August. So you kind of got like real choppy head and shoulders, but nonetheless, guys, you had the high, you had a lower high, and then you had the big impulse down. So assets, they make retracements, right? So you go from your all-time high to the lowest low of the correction, that wick low of that hammer. And look at where your fib nodes line up, guys. The 382 is confluent with that initial all-time candle high close from back in April, which is a pretty significant level right there at 120. You got to get back above that to take out all of these previous highs and that high. The next level, look at your 618, guys. 132.92. So that's your golden retrace level, right? From 382 to 618. So you absolutely could just be running to make a moderate retrace up there at the 618 and dump again. Or you could be going for a deep retrace, which would be your 886, clear up there at that initial all-time high from September. So guys, it could just be running up, take out that 886 to confirm that the top is truly in, right? So you have the all-time high. So this could be like confirming it that yes, you had an impulse down, you just couldn't get back above that 886 before dumping again. And then we enter like a long-term bull market or bear market, right? We'll just have to wait and see. So let me know what you think down in the comments, guys. I'd love to hear it. Like I said, I really like what we're seeing here, guys. I personally dollar cost average into it. I buy it week in and week out. I just added it like maybe last week because I like where it's at these levels. Again, you could just be, seeing some consolidation. It just absorbing that remaining demand at these levels before rolling over and headed back to $86. You break $86, I mean, you're going back to the COVID top, which was $76. So anything below 105, guys, really $100, I think you're seeing significantly lower prices. But you are showing signs of, classic reaccumulation at these levels. And who knows, guys, maybe you break out of this structure here, call it a rising wedge, call it an ascending triangle, whatever you want to call it. You're likely headed to 133 and then 144, 146 after that to at least test that top from back in April of 2022. So this video is for entertainment purposes only, guys. I'm not a licensed stockbroker. You always got to do your own research and due diligence. I will tell you, I love the Google stock. I think the fundamentals look great. I think the chart looks great, but let me know what you think, and I'll see you guys in the next one. Peace.